A positive day for the US stock market yesterday. Let's have a look at the key drivers. The US stock market experienced a positive day yesterday. It was up 1.86% on the day, and it was really positive sentiment seen across the majority of sectors in the US. One of the key aspects which was driving this optimism was signs that Trump was maybe going to come in with softer and more targeted tariffs than was expected prior to the election. Technology companies really led this rally. We saw very strong returns out of Tesla, Nvidia, Meta, Microsoft, Amazon and Alphabet. Whilst we saw positive returns in the stock market, we saw the bond market which eased as yields moved slightly higher, and the dollar was stronger on the day, up around 0.3% on a trade weighted basis. One of the key pieces of economic data out of the US was the flash PMI survey data. PMI stands for Purchasing Managers Index, and it's a survey across businesses in the United States of all different size and different sector. If we look at the composite, which brings together services and manufacturing, what we're seeing is an expansion in terms of the reading. A reading above 50 is good, and what we've seen is a reading of 53.6. And this is actually up from 51.6 in February, so we're seeing quite a strong reading in terms of sentiment from businesses. But where that strength's really coming from is the service sector. The service sector reading advanced to 54.3 from 51.1. What we're seeing within the services is really quite strong new orders. We're seeing the employment conditions are pretty healthy. Whereas if we look at the manufacturing sector, this actually contracted back to 49.8 from 52.7. Now, what we saw in February when the reading was 52.7 was really an advancement in new orders. This was companies getting new orders in advance of the tariffs which were coming through. So we've seen that blip really wash out in the manufacturing sector back in contractive territory where it's been for a number of months. And that reading was kind of expected by the market. If we look at the UK, it was a very similar picture actually. We've got the manufacturing sector which is in contractive territory. 44.6 was the read, down from 46.9 in February. It's 6 consecutive months where we've seen contraction in the UK manufacturing sectors. And one of the aspects which surveyors, respondents were noting was a rise in terms of their input costs, raw materials and labour markets, which was really increasing what we call factory gate prices. This is the cost of the goods which are leaving the factory gates for manufacturers. And like we've seen in the US, the service sector in the UK is actually very robust. 53.2 was the reading, up from 51 in February, and that's ahead of the market expectations. So services in the UK are very strong, and actually stronger than was initially anticipated. Seeing strong domestic sales, seeing strong international sales, employment conditions are good in the sense that there is still job creation. We're not seeing signs of severe job shedding in the UK service sector as well. But they did all recognise that they are seeing some signs of inflation pressures starting to emerge. So in conclusion, US stock market, very strong day. Overall sentiment overall was better on the day. We're seeing manufacturing in the UK and in the US, which is still in contractive territory, but some very strong readings out of the service sector. Important because both economies are service-led economies. Thank you very much for watching. We look forward to bringing you up to date tomorrow here on Morning Markets.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.